Welcome back to the Stevens Group podcast, where we break down real estate strategy for buyers, investors, and agents who want to operate at a higher level. Today, we're talking about the full investor spectrum, from renters and small residential landlords all the way to commercial and real estate advisory. I've got two heavy hitters joining me today. Michael Kaplan, who runs the Recap Group, a team that specializes in renters, landlords, and investors focused on residential properties, and Kevin Rocio, who leads the Rock Advisory Group, focusing on commercial real estate and working directly with investors on large-scale assets. Gentlemen, welcome to the show.
I feel honored. I feel honored to be here.
Thank you.
It's been great. I've known you guys for many years, and really nice to sit down with other titans of the industry.
Oh, geez.
I like being called a titan.
No.
I don't think I've ever been called a titan before, so that's add that to my resume.
Absolutely. Well, Michael, what makes renters and small investors a powerful niche?
So I'll kind of start off with a little background of how I got started. So I was at DePaul when I was 20 years old. So 18 is when I started there. And then once I got my license at 20, I didn't really know how to get clients. Like, I didn't know where I could go to. I didn't feel confident to go to older people, my friends' parents, things like that. So I just said, hey, where's my sphere at? Where are the people that I know at in their careers and life? And they're renters, right? So I just helped people find apartments. And what's unique about that is it allows you to enter into somebody's life at a very different point than any other broker would. Most of the time, brokers are entering these people's lives when they're much older and at the point that they want to do a buy or sell. But I took the philosophy of let's take this long term. You know, I'm putting all my chips in and I'm going to be a broker for the foreseeable future. I left college. I said, this is what I'm doing and I'm going to make it happen come hell or high water. And so I just took the long term approach to it. And that's where I think that it's super valuable if you are another agent out there or somebody who's looking to break into the industry. Don't ignore those people. And also, it allows you to see things if you are working with buyers and sellers later from an investment perspective, because at the end of the day, the value of a lot of these buildings and properties are derived from rental income. So when you understand the rental side of it, it allows you to become a much more well-rounded broker and allows you to be somebody that is just a resource for a lot of different people.
So, totally different route that I took when I first started in the business, right? I would take a totally different times as well. This was mid 2000s, and a renter would come to me and I would then tell them, hey, let me show you the path to home ownership. And I would talk them out of it and push them into a condo where they bought a 3-bedroom condo that they could afford. Right. They weren't sure. And then they would rent 2 of the rooms out to their friends and stuff like that. Right. So a little different route, but times are different now. Right.
Well, that's the biggest thing is that we're in a time where, you know, the average age of a first time home buyer is getting older and older. The cost of housing in general is not, I mean, especially in the markets that I work in Chicago and throughout the suburbs. Like, it's not easy to buy a home. So I want to be a resource to say, hey, let me meet you where you are and let's get a path in place to get you to where your goal is. But that may not be today, and it most likely isn't today, and that's fine, right? Let's build that relationship from the start and kind of go from there for many years to come.
So as an agent, I've always passed on referrals, right?
Yeah.
I always refer renters to you because I just don't want to deal with them and stuff like that. But why should more agents focus on renters? Yeah. And I think you touched on a little bit, but from a real estate agent's perspective.
Absolutely. I think it's one of the best ways, especially if you're a new agent, a residential agent, to get into the business and build your book of business for a few reasons. One, it's a volume game. You can work with hundreds. I mean, the way we have it structured is I typically at this point in my career, I'm focusing mostly on sales of anything residential up to 2 to 4 unit, which is still technically a residential transaction. And my team, who consists of Gordy and Mike, are handling most of our rentals, right? And what I think is the biggest benefit to that is, like I said, one, you can work with just a large amount of people at once. You have this huge, you can grow your database of not just people who know you, but people who have actively worked with you. I mean, my first year I was doing, even if it was 30 rental transactions multiplied sometimes by 2 or 3 roommates. Now what do you have? You have 60 to 90, maybe 100 plus people in your database, not just people who know you, people who have worked with you, know the type of job you do. And what are they going to do as long as you keep that relationship with them?
Refer.
They're going to refer you, and they're also going to purchase with you when that time comes. The key factor of that being you have to have a system and process in place to stay in touch with these people. And that's where I've learned a lot from this guy over here, K-Rock, the master of networking, staying in touch with people. When we go out places, there's not a single place that we go that he doesn't know somebody. So that's kind of my 2 cents on that.
So Kevin, you have Rock Advisory Group. And one of the things that I've always loved about the name of your brand is the advisory in there, right? You play this advisory role. Right. And that's been something I've looked towards you and your marketing and advertising. What you did was absolutely amazing. So you work with a lot of investors, and both on commercial and residential. So what would you say separates commercial investing and residential investing?
So residential investing, you're managing units. Commercial investing, you're managing systems. Okay, whether that is operational or just from a pure property management standpoint, you're mastering your systems, and then you're looking at how can I scale that, and that's where the main difference is.
Okay. And what type of mindset from an investor standpoint do they have to have for these types of transactions, or if they're on the residential side to transition into commercial?
It's going to be more financial because on the residential side, like I said, you're managing units, so you may start out as an accidental investor, meaning that you were renting and you said, you know what, I want to buy something, but I can't afford to buy a single family home, so I buy a 2-flat and I'll take on a renter. All right, so that I call that the accidental investor. And then maybe a year later, you say, you know what, I want to move. Instead of living in Ukrainian Village, I want to go out to Jefferson Park. I'm going to buy a 3-flat. So now you're the intentional investor. You did not go to the single family. You still want to stay in a multi-unit. You still want the tenants to offset the housing costs. And then from there, you say, okay, well, now I have 7 or 5 units. I can now afford to buy my single family home, but I like this rental income. So maybe I'll buy a 5-unit. So when you make that switch, the main difference is when you bought the 2 to 4 units, you were the financing decisions were based on your ability to afford. On the commercial side, it's based on the building's ability to perform, meaning that the building has to cover its own expenses and cover its own mortgage payment. And then what's left is your net operating income on the asset. That's the main difference.
Got it. What are you both seeing right now in your respective markets, right? So we'll start with you, Michael.
So I think I touched on this briefly. So we're based out of Lincoln Park, our main office. So we focus predominantly in the city, but we also have a little bit of a suburban tie. Not really in the south suburbs. I'm from the north suburbs. Shout out Vernon Hills. I'm from Vernon Hills. So we have a little bit of clientele and base out in the north, northwest, and parts of the west suburbs. I will say in the markets that we work, from starting off with the rental side of things, I mean, rents are we're in one of the strongest rental markets in the country right now. I mean, rents are going up year over year at a rate that is higher than a lot of other places. I mean, you look at places like Austin, Texas, parts of Florida, all around the country where rents are actually going down. Chicago is seeing the direct opposite. So, and that's only going to continue to increase because of the lack of supply that we have. And that kind of segues me into my next point, which is on the sales side of things, what we're seeing is the same exact thing, a lack of supply. There's not enough inventory to meet the level of demand in most places, right? If you have a $3 million condo in River North, different story, right? There's nuance to all of this, but if I were tomorrow, I mean, we just talked about it. You had an amazing listing in Lincoln Park. I mean, you could put a 2-bed, 2-bath in Lincoln Park right now up on the market, and you'll have 40 offers or 40 showings in a weekend. I mean, and that I would say that is kind of where the barometer is for most markets around the suburbs that we work, and also I would call them like the surrounding neighborhoods in Chicago, not really your downtown core. Downtown core is a little bit of a different story.
And same with you. So your respective market, how's the market right now? What are you seeing?
Let's break it into 3 parts. So on the south side, we are still continuing to see growth in from the investor standpoint. There's still an appetite because the Obama Presidential Center is opening this summer, and a lot of people are trying to get their foot base around there because there's going to be a huge need for housing for the people that are working there that don't necessarily want to go to the north side or what have you. On the north side, I'm getting calls from investor owners that are having issues because of the political landscape. So your Humboldt Park, your Hermosa, your Belmont Cragen, a lot of the immigrants are disappearing, meaning they're not in their apartments anymore. They were hardworking families. Now somebody's got picked up. They can't afford the apartment. So, now they're doubling up. So, and I see that also happening in the northern suburbs, so your Ukrainians, in River Grove, I'm noticing it. And so, it's interesting. So we'll see. Like yesterday, for example, I got 2 different portfolio owners who reached out that said, hey, I'm considering selling my portfolio, in Arlington Heights because we're having tenant issues because of what's going on in the political climate. So it's a tale of 3 cities right now that's going on.
Interesting. So overall, investors sitting on the sidelines, or are they active buyers?
Active, yeah. Very, very. There's, it's interesting. I'm selling buildings even before they go to market, and that's usually unheard of. Usually, I got to do photos. I got to, the offer memorandum. I'm selling buildings that people say, let me see the OM without the photos. I'm not worried about the photos. I'll drive by. I did 3 buildings so far this year where one, actually, while we were doing the photos, the property manager said, hey, what's going on? We're selling the building. By the end of the day, the full price offer.
Wow.
Okay. And the other 2 situations, we were out taking photos. Somebody inquired. One of the people inquired, and they say, here, take my information down. I just called them as a follow up and said, hey, we're going to have photos done by the end of next week. I'll send the OM. Can you send the OM now without the photos? I know the building. Sent it, offer, accepted, never went to market. That's unheard of. And I was telling Pat earlier, I said, this has been the weirdest year. January felt like June. February feels like July in terms of how busy it is.
Yeah. And most of these deals, are you seeing financed deals, paying cash?
Both. There's still a healthy appetite for both. It depends on the buyer pool.
Awesome. Michael, when someone owns a 1 to 3 unit property, what's usually holding them back from scaling higher?
Yeah, well, I'll kind of step back a little bit here, talking about how I view residential real estate and how I view residential property as a residential broker. I look at it as it's super important to me to set the expectation of this from the start, right? And so when somebody comes to me and says, well, I want to invest in real estate, I said, okay, well, let's figure out what that actually looks like for you and what that actually means. Because if you're looking at something that's 4 units or above, you're going to this guy right here. You're going to K-Rock. I can't get involved in that. I don't know that, and I don't have the proper connections and resources to help you. Now, you say, okay, no, I want to buy a single-family home or a condo. Well, I say, that's fine, but we're not going to look at it as an investment, right? If you're going to buy a property like that to live in, I caution looking at it like an investment for a plethora of reasons. If you go on my social media, I talk about it a lot. But it doesn't mean it's a bad play, right? Not everything that is not necessary. Like, I don't think that it doesn't make, I'm buying a condo right now. I own multiple properties. It's just the way you look at those things has to be a little different depending on what your situation and what your strategy is, right? Now, if you say, okay, I want to be somewhere in the middle, you want to invest, but you don't want to get into the commercial space, that 2 to 4 unit space is perfect because you can still get residential financing and you can still take advantage of all those types of benefits that you get from living in your own property while also getting some rental income to offset it. Now, what is stopping people from scaling at that point? It's a few different reasons. I think, if you're still working in the residential space, like K-Rock talked about, you're limited to what you can afford, right? You're not able to go get financing based off the building's ability to perform. You're based on and limited to what you can handle. So that's going to be the number one factor, right? Because they're going to be looking at your debt to income ratios and all these different things that lenders look at. And they may say, you can't do this. Like, there's no feasible way to do this unless you're buying cash. I think too, a lot of it is people don't go into it again, like with the right expectations of what it's going to actually be. I could tell you, as somebody who owns and manages a portfolio of 7 units and going to be an 8th unit, which is my primary residence in April, managing properties and running properties as a landlord is not passive income. Okay. Listen to me very clearly. If you are managing the property, it is not passive income. I've gotten calls because my tenants have been harboring somebody who had an arrest warrant, and the cops had an executed arrest warrant and knocked down the door and called me to let me know, hey, by the way, your door's broke. Thanks. Appreciate that. I've had them drunk call me at night. Just random, and that's just the basic stuff, right? On top of people being late on rent and all these different things. And that's not to scare you. It's more so just going with the right expectations of what that actually looks like. Because then when you go in with the right expectation, you're like, okay, I'm prepped. I know what I'm getting in for. And that doesn't leave a sour taste in your mouth to go expand and do more and buy another 3 flat or buy a commercial property with K-Rock over here or something along those lines.
Got it. Kevin.
Yes.
Biggest underwriting mistake that investors make on commercial?
I love this question. So there's 2. And the 2 are taxes and insurance. And I will expand. So on the residential side, you put in the MLS, 2023 taxes. And so
2024 now.
2024
Thank God
now.
the county's figured it out.
So 2024 tax.
Wow.
And you're qualified based on what those taxes are and so on and so forth. In the commercial world, residential brokers or brokers that don't understand, while they do post the 2024 taxes, an astute commercial investor will underwrite that building using what the taxes are going to be based on their purchase price. Mm-hmm. That's the mistake that a lot of people make. And a lot of lenders don't pay attention to that,
Yeah.
Insurance.
It's amazing that the lender doesn't look at this.
I'm surprised. And the other one is the insurance. So this is a great one. So I'll use a true case. Owners own the building for 15 years. Has insurance with State Farm. 12-unit building. Taxes. The insurance was $4,300 a month or $4,300 a year. So they prepared OM. They increased they did the smart thing, increased the current expenses by 3%, and they used that in their underwriting. Okay. As a buyer, you should always go get 2 quotes and then take the average of those quotes and underwrite that into your model before you make an offer. Yeah. Because what happens is you submit to your lender, they're going to take the broker's pro forma and they're going to approve the building, but then when it's time to get insurance, they're going to say, go get insurance. And that bill now is $7,000. They have to re-underwrite the building. And guess what? It no longer can cover itself. Those are the 2 mistakes.
Got it. And then in terms of, are cap rates really telling the right story?
No. I'm not a big believer in cap rates. It's a snapshot, but that cap rate is only as good as the data that was used to determine it.
Yeah.
Okay. So you as a detective or as an astute or working with an astute broker, a broker that knows, as experienced and knows what they're doing, or you yourself, you know how to underwrite. The most common thing is most brokers leave out vacancy factors and they leave out turnover in their underwriting. Okay. And so that cap rate, while it may say it's a 9, by the time you're done, it's a 7. Okay. And your debt cost is 6. Building can't cover itself.
Yep.
And I want to add one thing there too, is since, and I don't know if I've even said this before, but K-Rock and Chris here are both 2 of my mentors in this industry. Chris was my managing broker when I was at James & Sotheby's. K-Rock has mentored me throughout my years as a broker. And one of the benefits of being around people like yourselves in this industry is you get to pick up on things and learn things. And so specifically with K-Rock, I've been able to learn so much about investing in real estate that when a residential client comes to me and needs some help on that front of things, I can speak that language about the property without diluting my quality of service and delivering what they actually need, right? Because a lot of people want to come to a broker, but let's face it, a lot of residential brokers, they don't own properties, or if they do, the only thing they own is their single family home. They don't own investment properties and they don't understand what that means. So when somebody comes to me as an investor, if it's something that I'm have the bandwidth and understanding to take on, I can speak that language because, listen to people like K-Rock and yourself.
And staying in your niche, right? Like,
yeah,
I called you over the summer and said, hey, you got an opportunity for multi-unit building. Is this something you want, or who else would you recommend?
Right.
And you mentioned somebody else in K-Rock here.
Yep.
Right? And
then what'd you do? You called.
I called you guys, right? So, I think so many agents try to be the jack of all trades instead of the master of one.
Yeah.
And
You'll never see me sell a condo.
And you'll never see me put a 5 into 10 unit building on the MLS. Like, I've had clients come to me. Literally the other day, I said somebody was like, "Want to expand my portfolio? Looking in Chicagoland area. What are you looking for?" They said upwards of 20 units. I said, "I'm not going to be able to service that. And that's just me being completely honest to you. I don't have the same connections. I don't have the same access to listings. I don't have the same understanding that somebody like Kevin would, right? It's just not the truth. Now, if you come to me and say, hey, I want to buy a condo or a house or a 2 to 4 unit building, I own all that. Like, not only have I sold it, I own it. I can conceptualize it, but it's just it's a different ball game, and you just got to know what you actually do and niche down on it.
absolutely. All right, I got a fun question. Someone comes to you and says, I have $100,000 to deploy right now in an investment property. We're going to go with you first. Same question for both of you. Michael, where are you going to point him? What direction? And what does that look like?
Oh, boy. $100,000 put in investment. I say the northwest suburbs of Chicago. I say the northwest suburbs. I'm from the north suburbs, but I think the northwest suburbs of Chicago are a great point, especially if you have $100,000. You're probably, I'm assuming it's somewhere entry level. You get great, again, investment side. You're probably going to have an investment property, so looking for tenants, great tenant flow, excellent rent growth, and great appreciation. Great schools for people that are looking to keep their kids in this specific school district too. Like, a lot of great fundamentals that are in the Chicagoland suburbs, but specifically the northwest suburbs. And hey, we'll see where the Bears end up. Hopefully not Indiana, but if they end up in Arlington Heights, I think that'll only be a plus.
How about asset type?
Asset type. Well, again, I hope they have $100,000. I kind of want to work with them, so I'm going to say 2 to 4 units is probably good for you. But realistically, like, if you do have $100,000 and that's all you have to play with, 2 to 4 units is probably going to be the space you're going to start out, and at least in the markets that I work. So I would say 2 to 4 units. But I mean, you asked the same question with $500,000. I'll say go to K-Rock. We'll give you a referral fee.
Kevin, same thing with you.
So I'm going to ask, is that all you have? All right.
Great question.
That's going to be the first question. Is that all you have? Second, are you looking for income off the $100,000? Are you looking to start and build a portfolio? And if they say I'm looking to start, then I will say most likely 2 to 4, because there's not a lot of bandwidth or availability in that for $100,000, which would have to represent a 25% down payment. Plus, on the commercial side, you have to have 6 months reserves afterwards. So that's why I start the first question: is that all you have? So that's really going to dictate my answer.
Great answer.
That was a great answer.
There's a lot of agents listening, right? So for agents listening, how can they better serve their investor clients other than referring the business to you guys?
You start off, Rock.
So I've been doing a lot of co-branding with outside agents who have strong databases and on the residential side. And I'm teaching them, just as I taught the property agents, to ask one question. Do you have a commercial real estate need, or is your business looking to expand into space? And by simply asking that question, it opens up a conversation that you may not have otherwise engaged in. And then based on their answer, you may reach out to whoever the best broker is in your sphere to represent what they're looking for, whether it's leasing commercial space or they're looking to acquire.
Yep.
Yeah.
What makes an agent valuable to landlords, whether they're both residential and commercial? And I know you're the right person to ask this.
Yeah. Well, a lot of the things are things that have nothing to do with real estate. It's your ability to communicate, your ability to stay on top of things. I know for our landlord clients, the reason we've been able to not only help them fill their units, but then maintain the relationship enough to help them sell their smaller buildings. And the reason is because we just deliver on our promises and we maintain a level of communication that's exceptional. I'm not afraid to say it. My guys are just militant when it comes to that stuff. There's no zero time. I don't have a 3-strike policy on my team. I have a 1-strike policy. And if you violate that, it's going to hit the door. That's why I keep it small, because I want to maintain that quality control that you can't do when you have, 50 agents on your team. So with these investors, like, these are usually pretty, not always, but they care about their bottom line. They're pretty serious people. And at the end of the day, their whole business, especially if they're large scale, they got to that place by building relationships off trust. They don't have the time to sit there and worry about, like, I don't check in with my investors every day. Like, hey, what's going on with this? And they're not checking in with me. It's like, I trust you, do what you need to do. And if you're not doing what you need to do, let me know where I can help. But ultimately, if it's all built on trust. And once that trust is violated, they don't have the time to sit there and try and work with you. It's like, okay, I'll find somebody else. Like, there's however many other tens of thousands of agents in Chicago that are willing to do that. And then for the agents specifically out there that are listening, like I said, you do a good job with these landlords. You do a good job leasing their buildings. You do a good job with tenants, helping them find apartments. They will use you to buy and sell later on. So you're not in the business for that one transaction. We take a financial loss on almost every single rental transaction we do. Literally, by the time we take into account our commission splits, marketing, advertising, the time it takes going into these listings, showing them, and potentially not even getting paid on them because they may say we re-signed or whatever ends up happening, we literally lose money on our rental listings. But what I try and drill into my agents and have them understand is we are not doing this for the rental transaction. We are doing this to establish a relationship and then have that relationship so they transact with us later on when they go to buy and sell.
One of the things I love talking about with my agents is what is the lifetime value of a client? And you kind of hit on that right now. You might lose money on this rental, but are they going to refer their other friends? Are they going to use you to sell? Does their parents, they loved how you interacted? And I know you've gotten some great transactions from clients of yours on the rental side, their family members that are buying and selling multi-million-dollar properties and stuff like that.
How you do anything is how you do everything. If you treat your renters like crap, you never know who's watching on the back end of that. I helped a renter find an apartment in the South Loop for $2,500, $3,000 a month. And little did I know his dad was watching from the back end, looking to move to Chicago, gave me a shot as the broker, ended up buying a $3 million house in Hinsdale. I mean, what are we talking about here? But if you don't take that opportunity where you have it and you're like, I'm too good for that, I'm not going to spend my time. And I hear that so much with agents. I don't want to work with renters. Oh, Michael's a rental agent. I used to hear that all the time when I was 20 years old. I dropped out of college. Oh, don't work with Michael. He's just a leasing agent. Well, now I just sold a $3 million house and a $2.5 million condo at the St. Regis. So then tell me I'm a rental agent after that.
Mic drop.
Let's go some rapid fire. We're going to start with you, Kevin. Best asset class right now?
Continues to be multifamily.
Michael, biggest opportunities in 2026?
Buying an entry-level condo in a great location.
Kevin, biggest risks investors aren't talking about right now?
Ooh, tenant base. And I go back to the political climate, tenant base. That's the one thing they're not talking about.
Yeah. And Michael, one habit that made you successful?
Discipline. It's cliche, but I'm up at the same times every day. I eat the same things. I do the same things, same inputs, get the same outputs. And if you want to change something, you got to change the input before you get a different output.
Love it.
Love that.
All right. Last question for both of you. If you had to build wealth from scratch, starting today, no brand, no database, what would you do and what would you focus on first?
I would buy my first 2-unit immediately after college. I wouldn't rent. I would get a gift from a family member for the down payment, for the 5%. And I would start from there.
I would do what I did. Live at home. Keep your expenses as low as you can. And work your absolute rear end off throughout your 20s. I firmly believe it. It's the reason I'm able to now say that I have a portfolio of 8 units at 25 years old. I'm very happy with where I am in my life. And that didn't come from just sitting there and waiting for things to happen. It came from making small but deliberate steps along the way. And I heard a great quote. I don't think it was on TikTok yesterday, but you stay small enough, long enough, you'll become big enough soon enough. And I think that is the way to look at it, especially if you're young.
I love it. Gentlemen, thank you very much for sitting down with me today and sharing your wisdom with our sphere.
Yeah, absolutely. Thanks for having us. This is great.
Absolutely.
Michael, Kevin, I appreciate you both coming on. What I love about this conversation is how it shows real estate isn't one lane. There's a full ladder from renters to landlords to commercial investors, and understanding that ecosystem is where long-term wealth is built. For anyone listening, whether you're renting, investing, or your first property, or looking at commercial assets, the key is clarity, strategy, and the right advisor around you. If you want to connect with Michael in the Recap Group or Kevin with the Rock Advisory Group, we'll link their information in the show notes. And as always, if you're looking to grow your portfolio or your real estate career, reach out to the Stevens Group. We'll see you on the next episode.